So, hello everyone. Today we'll go over a great strategy for accumulating your Bitcoins and also trading at the same time. I'd like to discuss a specific tool that's available on many exchanges. Today we'll be looking at it on the Binance exchange. This tool is called CoinM Futures. Many of you have probably heard of it, while some may not have heard of it at all. Now, I'll briefly explain what this tool is about and why it's beneficial both when the market is falling and you're shorting, and also when you're longing and profiting from the market's growth. CoinM was originally created so that people could trade and earn profits not in USDT, as everyone is used to with futures contracts, but in coin, that is, in the actual coin. In our example today, we'll be looking at Bitcoin specifically. As we trade, we'll be earning profits in Bitcoin. Besides this, everyone knows that Bitcoin is growing, that its ATF, you can look at CoinM, was 70,887. Again, I want to say that all graphs are different. A spot chart, futures contract chart, USDT contracts, and CoinM, they are all different. They have a slight margin of error. And as for CoinM, why is it suitable for beginners? Why is it a cool way to grow your capital, a great strategy to earn more, and then hold your profits and make even more as Bitcoin rises? Here, the volatility isn't as high as it is with futures contracts when you're trading USDT or when you're trading, say, some altcoin. I don't recommend beginners get into altcoins at all because altcoins are extremely volatile. Always keep in mind, if you're trading Bitcoin with 10x leverage, then with altcoins, you should use a maximum of 3x or 2x leverage, no more. Because when Bitcoin corrects downward and you start trading and take a long position, that is, you're trying to profit from the coin going up, you might find that if you were in a long position on Bitcoin and it corrected downward, you'd lose a couple of percent of your deposit. But with altcoins, you could lose 20 or 30% of your deposit. Altcoins are more susceptible to dropping harder during sell-offs. That's why I always advise in my trading course and also in my P2P course that if you're just starting to trade, you should definitely begin by trading only 2 coins until you learn the ropes. You can take Bitcoin and Ethereum as the main coins because these are coins with large market capitalizations. They do correct, but not as sharply. They tend to move sideways more often, and it's precisely during these sideways markets that you can learn to trade properly. You're not chasing any sudden moves or squeezes. For those who don't know, it's something similar to when Bitcoin corrected here from 53,000 down to 40,000. At that moment, it was specifically a manipulation by the market, most likely by Binance, and there was a push downward and everyone started getting stopped out. A lot of long traders lost their money. The liquidations were really for very large amounts, and all because most people either had stop losses or didn't have any stops at all. They just got liquidated and their positions were closed, which was in general very unfortunate. So always remember to set your stop losses. So let's get back to CoinM. The first advantage of CoinM is that we earn profits in Bitcoin. That is, to trade, we also need to deposit Bitcoin into our account. Everything is done very simple. In previous lessons, I showed how to top up your Binance wallet profitably, specifically how to do it through the P2P platform. With the guys from the course, we look at different P2P options for topping up in the most profitable way using certain tools, but anyone can top up via P2P. So for those who don't know, when you go to the Binance homepage, you can select the P2P platform at the top, go there, and buy cryptocurrencies, either Bitcoin or USDT. You need to look at the exchange rate. So you buy USDT, convert it to Bitcoin, or buy Bitcoin directly, transfer it to CoinM and start trading. Trading is exactly the same. Here are the same stop losses and take profits. The only thing is, here again, you can only trade if you have the coin. So if you have coins here in Bitcoin, you can trade. I'd also like to mention that specifically here, you shouldn't use high leverage, even though I said that the volatility isn't particularly high compared to futures contracts on USDT. But believe me, even when you're trading with a small amount, say $100 or $200, and there's a correction downward, you lose about 5, 7, or even 10% on your position. And this is reflected even more strongly on your Bitcoin balance, because in addition to losing on the position, you're also losing from the drop in Bitcoin itself. So what you have there, you're losing it at the moment, but of course not forever. Because many people might think, oh, there was a correction, now I'm in the red. That means this loss will never turn into a gain. No, trading is such a thing where you need to know how to control your emotions. Sometimes you need to wait it out or average down. In any case, it's all experience. It's about developing an eye for things, getting used to looking at charts and communicating with more experienced people. And above all, it's experience and of course the ability to work on yourself. So for those who want to learn how to trade, I recommend starting your education from scratch. Go through all the basics thoroughly, build a solid foundation, and make your trading as adaptable as possible to your lifestyle and your deposit, because every deposit requires a specific type of strategy. Your emotional state should always be cool-headed, calm, and stable. So I wish everyone good luck. I'm glad I could share this tool with you. Many people didn't know about it. Now you do. Use it to your advantage, but always wisely. And everything I say is not financial advice. These are just recommendations and informational material. Goodbye, everyone. You can always find all the links to these sites and services in the description.